Hi friends, let us now discuss some export accounting, that is exports in GST regime, shipping bill, Forex gain and loss. By exports, I basically mean the export supplies with letter of undertaking or bond, and the inward remittance wherein the Forex gain or loss arises. Let us first discuss the difference between letter of undertaking and bond. The first criterion which comes is eligibility. Letter of undertaking can be applicable on a person who has received foreign inward remittance equal to minimum of 10% of the export turnover, which should not be less than INR 10 millions in the preceding financial year. Whereas bond applies to all other exporters. The second criterion is format. The LUT, that is the letter of undertaking, should be furnished in duplicate for a financial year in the prescribed format on the letterhead with authorized signature and seal, whereas bond shall be furnished in the prescribed format on non-judicial stamped paper of the value as applicable in the state in which the bond is being furnished. The third criterion is validity. For letter of undertaking, the validity is 12 months, whereas for bonds, it is applicable for each export. The fourth and the last criterion is bank guarantee. It is not applicable in case of letter of undertaking, whereas for bonds, the amount of bank guarantee would be decided by the jurisdictional commissioner, and it should not exceed 15% of bond amount. Configuration steps: create the required foreign currency, check exchange rates from cbic.gov.in, create customer for exports, create voucher type for exports, create ledger for exports, create item for exports, create ledger and voucher type for Forex gain or loss. Now, what is shipping bill? As you have seen in imports, the primary document was bill of entry. Here in exports, the primary document is shipping bill. Shipping bill is the main document on the basis of which the customs office gives the permission for export. Shipping bill contains particulars of the goods being exported, the name of the vessel, the port at which goods are to be discharged, country of final destination, exporter's name and address, and so on. The shipping bill is generated by the system in two copies, one as custom copy and another as export copy. Both the copies are then signed by the custom officer and the custom house agent. In conclusion, a shipping bill is a mandatory document that needs to be submitted to the customs department before the goods can be shipped, and it contains all the important details related to the exported goods and serves as proof of shipment. Required entries in Tally Prime: number 1, export sales, export invoice generation, inward remittance, and lastly Forex gain or loss adjustment. Now let us move to Tally Prime and pass export entries. First, you need to create the currency and you need to put the standard rate of exchange. So I have already created the dollar and I have put the standard rates. Apart from that, I have created sales exports as voucher type, and Forex gain or loss. It was already created at the time of imports, so it is there. Sales exports, and in sales exports I have mentioned the default title to print as export sales. So these two voucher types have been created. So far as ledgers are concerned, Forex gain loss was already created at the time of imports. It is there. I have created the customer who belongs to Florida, United States, and currency of ledger is dollar. Sales exports, just like other sales accounts, GST applicable, details are not required here, type of supply is goods. That's it. And I will not create any stock item. I will use the existing stock. I will use item C as my export item. Now let us pass the entry. Sales exports AC /001/202324. Let me change the date. This is the sales exports invoice number. Let me select the party. It is James Hadley. I am putting only the mandatory information. Sales exports, exports LUT bond. Let us select item C. Rate is $500. Rate of exchange is 80. If you press Alt plus A, Alt plus F1, there is no tax leviable on this. As you can see, it only shows the taxable value. There is no tax rate or tax value. Although, if you see here, there is tax details in the item. Export sales. Press Alt plus P. If you preview, Alt plus Z to zoom. Export sales is the invoice. So this invoice shows no details of GST. Now this is because I configured the invoice in such a way that it will not show any GST details. If you go to the configuration part, that is the print configuration part, you will see statutory details, now if you press enter here, if you make this yes, also if you press enter show GST analysis, see what difference it makes. Alt plus Z. Now this analysis is coming, which is not required for export purpose, especially under LUT or bond. You see the details are coming. It is not required because the customer is supposed to pay $5,000 and not more than that. He is not going to pay any tax amount. So once again, let us change the configuration. Right? If you see it again, you will find the previous pattern of invoice. Again, if you press Alt plus G and go to the GST reports, you will find export invoice. Right? Again, if you go to GSTR 3B, this is GSTR 3B, Alt plus F2. Outward taxable supplies 0 rated. Fine. If you press F5, the format will change and you can see here by pressing Alt plus F1 again, export sales under LUT or bond, that is 4 lakhs. Now the next entry will be inward remittance. So press F6, change the date, it is asking for the invoice number and the date. Select the bank account, select the party, write the amount, now it is asking for the rate of exchange, make it 85. So it becomes 4,25,000. Now you put the bank charges. Suppose it is 1750. Inward remittance. Now if you go to the particular ledger account of James Hadley, you will find unadjusted forex gain loss of 25,000. Now to adjust this, you press F7, select forex gain loss, select forex gain loss as class, then you select the party, the amount comes automatically, and this is forex gain loss adjustment. Now if you go back to the party ledger once again, you will find that it has been adjusted. If you go to balance sheet, and then profit and loss account, you will find forex gain loss carrying no balance, because previously there was a debit balance of 25,000 and now you have a credit balance of 25,000. So both cancels and now it carries a zero balance. You can see sales exports 4 lakhs. So this is all about export accounting. Thank you for being with me. Bye.